welcome back my dear class 11 student. Now very good afternoon. Am I audible to you? Devargo is here. Am I audible to you? Devargo? Can you hear me? Devargo, am I audible to you? Please respond to your chat box. Devargo, sound is clear? Devargo, are you there? Now, last day I discussed about asset disposal account. As we are going through the chapter depreciation, under asset disposal account, whatever the journal entry you have to pass, we learn in last classes. Now, today we take a practical example through we learn how we can make a asset disposal account and what is actually asset disposal account. Now, first take an example. This is very small example. Suppose machinery at a gross value of rupees 5 lakh. Machinery at a gross value rupees 5 lakh. Now, accumulated depreciation means provision for depreciation actually followed by the particular organization. That's how total accumulated depreciation. They said accumulated depreciation, the amount is rupees 2 lakh. Now, suppose a machine purchased for rupees 2 lakh, having accumulated depreciation, rupees 80,000 was sold during the year for rupees 1,35,000. Prepare asset disposal account. So, this account generally we make when there is a sale, at the time of sale. Okay. And why asset disposal account generally make? Because a company has not a single machine, there are lots of machine actually they use, and if we sell one machine from that, then it will be very easy to make the asset through asset disposal account. Then it is very easy for the company to know which machine actually sold, what is the price, is there any profit or loss of this particular machine or not. Okay. So, so that the asset disposal account actually make. Otherwise we can also see that in machinery account we can sell the machine. Okay. So particular need of asset disposal when there is a more than one machine in a company, and so things should be easy, as things should not be complicated. That's why we actually make the asset disposal account, because this year we actually sell some part of the machine out of one machine. The next year we actually sell another machine. So each and every year we can sell the different machine in different year. Okay. So what machine actually we are selling and what is the profit against or loss against that particular machine, we will, it is very easyable, or it is very convenient to know for the company if we make the asset disposal account, and so that's why we actually make the asset disposal account. It is basically used for the when the selling. What is the purpose? For the selling of the assets. So in that case, in that example, you can see machinery, a company, total machinery at a gross value rupees 5 lakh, they said, and total accumulated depreciation as of that date is not mentioned, 2 lakh. So a machine, then they said a machine actually purchased for rupees 2 lakh, means which original cost of rupees 2 lakh, having accumulated depreciation of 80,000. This particular machine has a accumulated depreciation is 80,000, was sold during the year. During the year it is actually sold for rupees 1,35,000, and now we just prepare a asset disposal account. Now look how can we make that. Now so that is a first write, that is a asset disposal account. Asset disposal account. Okay. Now we have to make a ledger for that. The ledger format is same. That is date. Here is no date actually given by the example. First there is a date, then particulars, and there is a amount rupees. This side is debit and this side is credit. Same thing happen here, date, particulars, and rupees. Okay. So asset disposal account. Here no date is mentioned. Now first look, a machine purchased for rupees 2 lakh having accumulated depreciation of rupees 80,000. That is our important. The first two, what is machinery gross value 5 lakh, accumulated depreciation 2 lakh. This is if we make the machinery account, then it will be important. Okay, here I am just doing the asset disposal account, the asset which is related to sales. Which machine we are selling? The machine we purchased for rupees 2 lakh, we are selling now. The original cost is 2 lakh. So first journal, last day I actually I discussed, that is asset disposal account debit to asset account. From machinery account we have to transfer this to asset disposal account. So machinery should be credited and asset disposal account should be debited. So in asset disposal account, here you should write to machinery account. To machine account, that is 2 lakh. we just transfer original cost of the machine in asset disposal account. Now here it said that accumulated depreciation for that machine is rupees 80,000, means we have to transfer this to provision for depreciation account, where the total accumulated depreciation was 80,000. So in that case, what entry we have to pass? A provision for depreciation account debit to asset disposal account. Okay, provision for depreciation account we will debit it, and asset disposal account will be credited. So in the credit side of the asset disposal account, we write by provision for depreciation account, only for that machinery, particular machinery, provision for depreciation account, that is 80,000. Okay, we have posted also that. Now which amount they actually sell? They sell the price of rupees 1,35,000. So in case of sales, bank account debit and asset disposal account should be credited. Okay, bank account debit to asset disposal account, as we are getting the, when we are actually selling, that is our, we receive cash or bank, that is our actually personal account, that is receiving, receiver. Okay, so we are receiving, or you can say that is a real account, and that comes in. Okay, so bank account debit to asset disposal account by bank 1,35,000. It is the selling value of the machinery, 1,35,000. Now from here you easily know what is our next step. Our next step is we have to make there is a profit or loss or not. So whatever the balancing figure will become, that will be the set the profit or loss. So here the balance, what is would be the balance? 80,000 and 1,35,000, that is 2,15,000. 2,15,000 is the balance, and debit side that there is a 2 lakh. So this side is less than the credit side. If debit side is less, means there is a profit, because in case of profit, what channel entry we pass? That is asset disposal account debit to profit and loss account. So to profit and loss account we have to make to profit and loss account, that is, this is not our business income, so we will write actually gain on sale of machinery, gain, not profit, gain on sale of machinery or machine. Okay, what will be the gain? Easily you can find from that, that is 15,000, that is the balancing figure. If debit side will be more and credit side will be less, that means there is a loss. So at that time we have to write by profit and loss account. Okay, so that is the beauty of asset disposal account. You easily can find what is the profit or loss of the selling of the machinery or sales of the machinery. So that is now 2,15,000. So at that way you have to make the asset disposal account. From that account you can easily know the total asset value is 2 lakh, provision depreciation on that asset is 80,000. We sell the the selling price of that machinery 1,35,000. Whether there is a profit and loss, here the profit, that is 15,000 for this particular machinery. This is the purpose of asset disposal account. Okay, have you understood? If there any problem, you can ask me the question. Here you do not need to manually all the things, you can easily whether there is a profit or loss, you can easily find out from that asset disposal account. Now we will make take another practical example from your NCERT book. It is question number 11. Question number 11, and of your NCERT book, question number 11, page number 285. Okay, Puritos Pamanik is here, joined by late. Already I have discussed about asset disposal account through a practical example. So this is the another practical example we will take, that is question number 11, page number 285 from your book. Now I am rubbing this. Now question number 11 from your book, you can see that there is a Saraswati Limited purchase a machinery costing rupees 10 lakh on January 1, 2011. In January 1, 2011, Saraswati Limited purchased a machinery which costing rupees 10 lakh. A new machinery was purchased on 1st May 2012. Again a machinery was purchased and which date 1st May 2012 for rupees 15 lakh, and another on July 1, 2014 for rupees 12 lakh. Now a part of the machinery which originally cost rupees 2 lakh in 2011 was sold for rupees 75,000 on April 30, 2014. Date is very important in case of depreciation. When you are making the depreciation accounting, the date is very important. I have already said it before also. Now we have to show the machinery account, provision for depreciation account, and machinery disposal account from 2011 to 2015. If depreciation is provided at 10% per annum on original cost, and that means you have to follow the straight line method, and rate of depreciation is 10%, and account are closed on December 31 every year. Every year the account is closed in December 31. Okay. Now we have to make these three accounts. One is machinery account, one is provision for depreciation account, and one is asset disposal account. Now this example is very long, three accounts we have to make, but here we like to do just one account. We like to take just one account, that is machinery disposal account, because our focus on that. So if we take the machinery disposal account, how these things will be happen, we just look for that. Now first make a machinery disposal account, same format. Date, particulars, amount rupees, again date, particulars, amount rupees. Now see what they said. Now, they are saying a part of the machinery which originally cost rupees 2 lakh in 2011 was sold for rupees 75,000 on April 30, 2014. So the machine actually purchased which year? In the year 2011. And 2011 they purchased a machine whose costing rupees 10 lakh. From this 10 lakh of machineries, 2 lakh machineries whose value of the machine is 2 lakh, now they are want to sold, and they actually sold it April 30, 2014 and sold at a price of rupees 75,000. And we are in that as per question, we are maintaining that straight line method of depreciation and depreciation rate is 10%. Okay, now first find out what will be the depreciation for that machinery. What will be the depreciation? Okay, because this machinery actually purchased in 2011. So we will not take the whole amount of 10 lakh. From this 10 lakh which was purchased in the year 2011, we are just sold now, actually selling only 2 lakh value of the machinery, because machine does not mean this is a whole machine. There is a machineries they actually purchased, and one of the part of the machine is value is rupees 2 lakh. Now they want to sell. So this machine value is rupees 2 lakh. Now we have to make first working. What is the I am doing working in here. Look the working. So total original cost of the machine in 2011, that is 2 lakh. Okay, so 2011 opening balance Now there is a depreciation and closing balance. Depreciation and there is a closing balance. Opening balance, there is a 2 lakh rupees. If there is a 10% depreciation, that is 20,000. So closing balance will be 1,80,000. Next year opening balance 1,80,000, but we will charge depreciation of the original cost, that is 20,000 again, and the closing balance will be 1,60,000. Next opening balance will be 1,60,000. 2 lakh is the original cost, so we will charge depreciation upon original value, that is 20,000. Again that is 1,40,000. Now that is 2012, now it is 2013, now 2014, the year we are selling the machines. Now that time the value of the machine is, opening balance of the machine is 1,40,000. Now in that year the machine actually sold on the date of 30th April 2014 and account will be closed in 31st December. So January, February, March, April, we use the machinery just for 4 months. After that we sell it. So for 4 months we will charge the depreciation, and that depreciation value will be 6,667. Okay. Upon 2 lakh, that is 20,000. So 20,000 multiplied by 4 divided by 12. Okay, that depreciation will be come. So we depreciate that year up to the sale point, that is month of April, 6,667. Then what balance will be left? 1,33,000. 1,33,333. So that balance will be left. So that is the book value. Now this one, from this 1,33,333, we have to less the sale value, that is 75,000. So sale value is 75,000. So machine value and that year, that is 2014 up to April, is 1,33,333, but we sell actually machine at the price of 75,000. So there is obviously we actually loss on sale, that is 58,333. Okay, 58,333 will be loss, will be come. Okay, maybe you guys have you seen that? You can see properly. So this is the loss on sale. Now we will post how we can post it as a disposal account. Now look. Okay, very good. Now look. So in 2014 April year 2014 April 30 means 30th April. Okay, year 2014 30 April, first we have to transfer the machine original value to machinery disposal account. What will be the journal? Machinery disposal account debit to machinery account, that is 2 lakh, that is the original cost of the machine we transfer to the asset disposal account. Now we have to transfer again the provision for depreciation. From where we actually get this accumulated depreciation? From provision for depreciation account, we will transfer the depreciation for that particular machine, that is 2 lakh, whose value is 2 lakh. We have to transfer to the asset disposal account from the provision for depreciation account. Accumulated depreciation means we are accumulated depreciation in the provision for depreciation account. Now I have already showed the working. In working there is a, in 3 years we find depreciation, that is 20,000, 20,000, 20,000, for 2011 20,000, 2012 20,000, 2013 20,000, and 2014. As we are using the machinery for 4 months, we get 6,667. Now total value of the accumulated depreciation is 66,667. 66,667. So that value of the depreciation we have to transfer to the asset disposal account. That value is coming from the provision for depreciation account. Okay. So that is the same date, that is 30th April 2014. So what will be the journal? Provision for depreciation account debit to asset disposal account by provision for depreciation account. That is, what will be the value is come? 66,667. 66,667. Where from come? From provision for depreciation account. If we make provision for depreciation account, there you have to debit the two asset disposal account. In debit side and in credit side of this asset disposal account, it is debit and it is credit. You have to charge 66,667. That is the total depreciation and the date of sale for that particular machine, that is rupees 2 lakh. Now they sell the machinery at a price of rupees 75,000. The date is same, that is 30th April. Now by bank account debit to asset disposal account. In earlier what actually we have done, bank account debit to machine account. Here we have actually opened a particular account for this particular selling of particular machine. So bank account debit to asset disposal account. that is 75,000. Okay. So, if we do not calculate the profit and loss, what is it? Is there profit or loss for selling of the machinery? Still we have to get from this asset disposal account, is there profit or loss? Now, so see, there is a 2 lakh in debit side, but in credit side still there is some amount you needed, and that amount is your loss amount, because credit side is less. So, by profit and loss account, loss on sale of machinery, loss on sale of machine or machinery in the date of 30th April, that is 58,333. 58,333, that we have already revealed in when we actually made the workings. Okay, that is loss on sale. If there is a profit, if credit side will be more, then there will be profit, debit side will be less, then you have to balancing figure come in that side, that is debit side. This means profit and asset disposal account debit to profit and loss account, and that will be the gain of the selling of machinery. But when the credit side will be less, that means the loss is happened. So, here you do not need to actually perform the workings to know there is a profit or loss. Usually from balancing figure you can easily get there is a profit or loss. Okay, if this is a debit side will be less, that will be profit. If credit side will be less, in that case, that particular case credit side is less, and what is the amount? That is 58,333 is less, and so that this is the loss amount. And now you can find this is a 2 lakh. There is no balance will be left for asset disposal account, that will be closed for that particular machine also and that particular year. Okay. So, that is way you have to make the asset disposal account. I hope you have understood. Is there any problem? Now you can ask me the question. Kritika, you are also late. I am again and again actually trying to try to make you understand that join the class in beginning, otherwise it will be very difficult for you to understand the thing. Kritika, why are you so late? Puritos, have you understood? Okay. So, this is the actually end of depreciation, okay, but not the chapter. This is the chapter name is depreciation, provision and reserve. So, next we will start the what is provision and reserve, that is mostly theory part, but there is some numerical question also come. So, we will first learn the theory, then we will go to the numerical part. So, that is the end of the class. Thank you.